Hello, good morning. Welcome to the Joy Business Report. Coming up this morning, new ECOWAS Bank report warns rising crude oil prices and interest rates pose major risks to Ghana's economic recovery. Ghana National Chamber of Commerce and Industry challenges claims increasing monetary policy rate will control inflation. Plus, independent power producers to meet tomorrow to strategize on how to retrieve some debt owed them by government, as debt is expected to hit $2.2 billion by the end of July. Details coming up. My name is Darryl Kwao. Thanks for being with us this morning. Rising crude oil prices on the international market and interest rate hikes by some developed countries pose a major risk to Ghana's economic recovery. This was captured in a new ECOWAS Bank for Development and Investment report. The report also warned that growth will decline to 1.3% this year before it picks up strongly next year. Dr. Joseph Asenso is head of Macroeconomic Research and Studies Division at the bank.
The war in Ukraine, the longer it subsists, the more difficult it is for our economies because it has an impact on energy and food prices. Europe has served a warning that it is not ready to back down on the policy rate hikes. The US has not indicated that it is going to stop. What this means is that every time they hike, especially the US government, the dollar strengthens and our economies, which are somehow dollar dependent, begin to suffer because their currencies weaken and it feeds into inflation. These events will not be good for us. And when our own central banks also decide to hike the policy rate in a bid to control inflation, that immediately increases the cost of borrowing for businesses and for individuals, which also feeds into GDP, overall economic activity as well. So this is something that we need to have a look at.
That was head of Macroeconomic Research and Studies Division at the ECOWAS Bank for Development and Investment, Dr. Joseph Asenso. Senior finance lecturer at the University of Ghana Business School, Dr. Benjamin Amwa, says businesses will not be harshly affected following the increase in the policy rate. The Monetary Policy Committee of the Bank of Ghana on Monday increased its policy rate by 50 basis points to 30%. Meanwhile, Dr. Amwa believes a marginal increase would rather aid in the quest to control inflation. He spoke to Joy Business.
It's going to be marginal. Businesses will not necessarily increase prices because of a 50 basis point increase in policy rate. I don't think banks will quickly also increase their loan rate because of a 50 basis point increase in height. It will lead, but it will not be that marginal like what we're seeing, 150 basis point and 200 basis point increase. Those are quite, huge jumps.
Dr. Benjamin Amwa, senior finance lecturer at the University of Ghana Business School. Meantime, the Ghana National Chamber of Commerce and Industry is challenging claims by the Bank of Ghana that the hike in the policy rate is to control inflation and liquidity in the system. According to the chamber, the method being adopted by the regulator to tame inflation is not effective as inflation rather keeps increasing. They contend that 30% policy rate will complicate the current challenges facing industry and result in further shutdown of businesses. Speaking to Joy Business, Chief Executive Margaret Duabuaje said if government continues to impose taxes, controlling inflation will be difficult.
If you continue to increase the tariffs of utility tariffs, this monetary policy will not work. If food inflation is very high and we are not getting food, monetary policy will not work. It's not more money in the pocket of people chasing fewer goods. It's a supply side constraint. Food is not there. Producers are producing at a higher cost, and this will translate into higher prices and into inflation. So monetary policy has not been effective, and I've said it and I'm going to say that it's not effective. They can continuously increase the monetary policy, but it will not solve the inflation that we have.
Chief Executive of the Ghana National Chamber of Commerce and Industry, Margaret Duabuaje. The International Monetary Fund may not be lenient in releasing the second tranche of monies under the bailout program to Ghana if government fails to show commitment in reducing the country's debt stock. That is warning from economist Professor Lord Mensah. He argues that the first tranche of $600 million was advanced to government because the country was in a difficult economic situation and needed emergency funding. Now, speaking to Joy Business, Professor Mensah said the IMF would like to see some action on debt reduction to send signals to the investor community.
Yeah, basically, the first tranche, let me put it was more or less an emergency tranche. It is a tranche that, the external or the IMF saw the dire consequence of our economy. And as a result of that, they had to relax some of the requirements. And so I believe that with the second tranche, they may strictly, keep to the requirements. And one of the requirements is to make sure that we reduce our debt burden. And remember, IMF does not lend to a country that is in debt distress. And so if your debt burden will be hindering, the possible benefits that you're supposed to gain from the program, they may not go on to extend, the facility. So the first one is more or less a rescue, relief. And the subsequent ones, I believe they will go strictly by what is all.
You have economist Professor Lord Mensah. You're listening to the Joy Business Report. In other news, the independent power producers will convene an emergency meeting tomorrow, the 27th of July, to strategize on how to retrieve some of the debt owed them by the government. Joy Business understands that the debt is expected to hit $2.2 billion by the end of July. The IPPs, we further learn, are unhappy because the government has breached its promise to settle part of the debt. The IPPs had threatened to stop supplying power to the national grid if the government failed to fulfill part of the obligation to them. It took the intervention of the managing director of the Electricity Company of Ghana to stop the planned withdrawal of power to the national grid after a promise to settle some of the debt. The action could have led to power fluctuations, public hold so as the 6 IPPs produced 210 megawatts of power. Now, the European Union, as part of moves to strengthen its economic partnership with Ghana, has joined the International Trade Center to provide support for coffee farmers in Ghana and other African countries. The move forms part of an initiative by the 2 global partners to promote sustainable farming and open up opportunities for farmers. According to the first Counselor of Trade for the EU delegation to Ghana office, Raphael Kweto, this initiative will ensure that Ghanaian farmers benefit from some added value on coffee products and market access in the EU.
We want to make sure that the partnership that we have is real partnership, so that European importers, producers, traders, actors in the sector of coffee can really partner with the Ghanaian companies, in particular with the Ghanaian farmers, which I think is the key sector that we want to support in this project, and also the other actor in the areas. So we have the traders, we have the marketing people, we have the roasters also, which I think is important for making sure that the added value is kept in Ghana, so that Ghana benefit of the value addition of the coffee sector.
Raphael Kweto, the first Council of Trade for the EU delegation to Ghana office. Now, this morning, becoming a playwright was not his original dream. However, Lateef Abubakar is taking theatre in Ghana to another level. Today on the Joy Business Van, we head to Globe Productions, where Lateef and his team are not just producing plays to make money, but impacting society with their storylines. If anyone told Lateef Abubakar that he was going to be a playwright or do theatre, he probably would have laughed it off.
My love for theatre was driven by my passion for entrepreneurship.
Along the way, Lateef and his team thought, why not pick up a product in the entertainment industry? Theatre at the time seemed less exploited. That was 2008.
Nobody was doing massive theatre at the national scene. As at 2007, 2008, nobody was doing theatre. I mean, National Theatre actually does some performances, but it's those dry kind of performance where you go there and you see just 50 people in a 1,500 auditorium or 100 people in a 1,500 auditorium. So we felt that let's commercialize theatre properly and then let's champion that cause.
Globe Productions started work on its first play.
You are asking me what I am doing here. If not, tell me what is going on between the two of you. I will break your neck and...
Story continues. Full episode 1 p.m. right after the Joy Business Report, 5 p.m. on Business Live on the Joy News channel. Don't miss it. Before we go, let's check the markets for you this morning. Let's begin with the currency market. The dollar going for 11 cedis 68 pesos on the forex or retail market. The pound going for 15 cedis 20 pesos. The euro going for 12 cedis 85 pesos on the commodity market. Crude oil open trading at $83 a barrel after increasing from yesterday's trading. Gold lost marginally, selling this morning at $1,963 an ounce. Cocoa trading at $3,470 a ton after going up by $53. There's more news on our website, myjoyonline.com/business. Head there for the day's latest business stories, myjoyonline.com/business. And here's Winston with more of the Super Morning Show. Good morning, Winston.
Good morning, Daryl. How you doing?
I'm good. You?
God is taking care of his children. As you can see.
As I can see.